All right, what up, everyone? Welcome back to Financial Education. As you can see, I got a little unique setup. I got a sock for my mic. Um, but in this video, I'm going to talk about just software stocks. And it seems like with the age of AI, software is dead, and everybody's concerned about that. But something that I've kind of noticed is that ignoring software, specifically companies that have the data, is probably the dumbest way to look at some of these software companies. Let me share my screen here so you can see Dell. Let's see. Let me share the correct screen with y'all. Definitely not that one. That one right there. Cool. All right. I guess let me just restart. What up, everybody? Welcome back to Financial Education and Business. As you can see, it looks like software is getting beat up. This is Adobe. They reported their earnings today. Numbers are pretty good. I mean, estimate 6.46 billion. They hit 6.6. Definitely beat it. EPS, they beat EPS. ARPU, they beat ARPU, and first ARR 500 million, which is up 200%. Obviously, this AI product, AI related revenues are going to be a lot higher just because they're newer products, and then they can onboard a lot more clients because it's just new. And this is where companies, old software companies, have to kind of prove themselves and show that they actually can perform in the long term and actually have an outcome that is positive and don't get consumed by AI. Adobe, as we know, everybody knows what Adobe does. They kind of allow you to edit videos, and the cool thing about Adobe is that they're embedded into a lot of companies, a lot of corporations, and so essentially video editing. That's taking up my GPU, so let me close it. But yeah, video editing and everything else. But a lot of this nowadays can be done with AI, and so that's why Adobe is getting kind of kicked here. The reported earnings, and despite beating expectations, and also sales guidance has also been raised and beat. They were hit by about 6% during the day and another 6% after market, which is insane to see. So who knows, like Adobe could come back in the future, but also they are one of those companies that are deeply embedded into companies' operations. So I don't know, if you think about it, corporations have marketing budget, and their marketing budget is going to be is going to be there, so they can get sales, and they can sell to their clients. And at the end of the day, these corporations are not going to want to make a brand new platform that will allow them to generate videos. So the only thing they can do is maybe use what they have, like Adobe, and create better marketing products. So this is where Adobe could be useful in the long term, but what they could lose is what their client could demand is price reduction because of alternatives that they have out there. So we'll see where they go. I think in the long term, maybe this company might have been overvalued. Who knows? They're 88 billion. There's a lot more, a lot more new apps and new companies, kind of coming up with the same, similar, or just as good products that are more AI centered. Um, so, but we'll see. We'll see where it goes. I think Adobe here wouldn't be one of my favorite buys from a software perspective. If I was looking at software stocks, I would definitely be looking at specifically software like ServiceNow, not CRM. ServiceNow honestly is like one of my favorite software companies, just because they have really put AI in the front of what they do. And recently, they actually have partnered. ServiceNow has partnered up with IBM, and so IBM is another, I think, a great company from multitudes of different types of investment opportunities here, because IBM is not just a software company, but they have the most data on corporations. So I can't believe IBM it's not in here. So let's add IBM to my favorites list. Ah, damn, I can't. So okay, yeah. So IBM, ServiceNow, I mean Datadog. That's another really good one. ZS Scholar, ZS ticker symbol. They're also pretty good. So I've been just keeping track. Like this CrowdStrike, this is more of like software, cybersecurity company. Decided to keep them in here. Obviously, I can add thousands and thousands of other stocks, but these are the ones I wanted to keep track of to see what's going on. You got Figma. They kind of focus on allowing you to kind of create a website, but create a website in a very collaborative manner. So you can have 10 people working on the same site at the same time, which is how the future of web development is going to be. So also you have Wix that does the same thing. They're not in this list, but Wix has been around for a while. They have bought Base 44 to kind of compete in this industry, which allows you to create Base 44, Base 44, which allows you to create websites very easily and use agents to do so. And the same thing with Figma, but allows you to collaborate. So the one company that I kind of wanted to focus on is ServiceNow. I think that ServiceNow is one of those companies that has a data moat. And let me zoom out here. Okay, let me bring in ServiceNow. Let me click on now and show you what's going on here. $now. So here you go. So ServiceNow, I've been buying this company for a while now. I think I bought it at in the 90s, 89, $88 range. I mean, it's up. It's I mean, overall it's down. If we look at the 5-year performance, this company is only up 3.5% about. So it's the price range is hitting lows of back 2020. What year is that? 2022, I think. So they are hitting new lows, and I think that this company has a moat. I think they are newer. They can, I think, take a lot more market cap from existing like CRM companies like CRM, Salesforce, and I think their partnership that is close with NVIDIA, Jensen Huang, has been pretty impressive. That they've been able to sit down and do some interviews. But also, I think the products that they have around the agent force is pretty impressive. So just essentially, if you don't understand what ServiceNow does, they help corporations solve IT related problems. So your computer isn't working for whatever reason. You're a big firm at a big firm, and you put in a ticket, and that ticket goes to ServiceNow, and ServiceNow helps you solve. They'll get on a call with you and help you solve whatever the problem that you're having. Now, imagine the number of customers that ServiceNow has. I wish I could just quickly pull it up, but they have. Let me see if I can actually pull up their investor relations here. ServiceNow investor relations. So while that loads, let me just kind of explain what I mean by, like, if you have a problem, a ticket goes to a ServiceNow person, they call you up, and you explain what happened, and they help you solve your computer problems, and you're able to quickly get back to work. They do this for, hundreds, if not hundreds of thousands of customers, and they allow, for example, like if you needed a new laptop, if you needed a new headset, you essentially go through like this company for all those types of different services. So if we go into their investor presentation, let that load up. So when whatever problem that you have, you call them up, they help you solve it. And now imagine, throughout all these years that they've been around, they've been solving all these IT related tickets. Now imagine the amount of data that they have been able to collect and resolve throughout these years. And so that kind of, should kind of turn the wheel and say, okay, so what does this mean for a company like ServiceNow? Well, they have a whole bunch of data on companies out there that they're able to now plug into an agent and have a conceptual understanding of what's going on with that person's IT problem. So in the future, let's say you're working at a company and you say, I have an IT problem, and you submit that ticket, an agent automatically takes whatever problem you have, looks at the existing data, and then starts analyzing, okay, like, is there another time when somebody else had the same problem? What do they do to solve it? And automatically just, fix your computer problems. And then also, if a person needs to step in, obviously they can, but I think their Agent Force product that they have is pretty impressive, that they're using AI agents, and with their data moat as being one of the key things that really is going to change the direction of this company. So looking at their investor relations right now, maybe let's make this a little bigger. Let's zoom in. So technology workflows, core business workflow, CRM and industry workflow, and creator and other workflows. So what is ServiceNow's AI game plan? So ServiceNow's AI game plan essentially is, let me go into here. They want to be able to essentially use AI to solve any corporation's AI related problem. So they want to be able to have now a ServiceNow AI agent that will solve companies and corporations problems, and it's no longer just like a person sitting at the other end to solve whatever ticket issue that any person in any given corporation is having. So that kind of makes you think, well, what happens now? Because usually ServiceNow will have to hire a whole bunch of people to resolve the volume of tickets that these corporations are having. But how are things gonna look when now you need less people? AI agents are able to automatically, or maybe 80% get a ticket resolved, or 80% of the way there, and maybe it needs last 20% or last 10% human interaction to get it to the final end. Well, this allows ServiceNow to be more efficient, and maybe they don't need a team as big as they have. I think what did that say, about 24,000, 29,000 full-time employees. So could ServiceNow get to 15,000 employees because now they're using AI agents to resolve tickets or get most of the problems with these tickets resolved, that you need less people to finish off the tickets or get the tickets to the final stage of human interaction. So that is their game plan, and their goal is to essentially give their clients this ServiceNow platform that whatever company wants to use it, all they have to do is just log into this ServiceNow AI platform, and the platform kind of helps them go through and solve whatever problem the person is having. So one, AI in the flow of work, not in another tool. Enterprise AI, not application tool. Autonomous workflows, AI control tower, and open by design. So this is actually one of the most important things for ServiceNow, because anybody can go out there and create some type of AI related product that helps companies solve their tech problem. But how can you and how can however these companies, these smaller startups that are trying to do the same thing that ServiceNow is doing, are going to face some major setbacks. And the reason because is that the governance and security build. Well, imagine you start up a company and you try to hook up your technology to some of these large corporations. Well, do you have the certification, credentials, trustworthiness of being able to govern and be secure to help these corporations actually do some of the problem solving? Can you be trusted? And so with a company like ServiceNow, they've been around. They have all these credentials that allows them to do these things, and they have the data moat. And so if you're a startup trying to do what ServiceNow is trying to do, it's going to be a lot more. One, you don't have the credential built out for decades. Two, you don't have the money and the number of corporations that love or have been using your technology. And three, the data moat is actually one of the biggest thing here. Like ServiceNow has had their data there for a long time, and they've been building it, and now they can plug in an AI agent into the data and actually get results for companies. And another thing is, like, can other companies trust that the platform that you're providing is secure enough and not going to get hacked by another agent from another corporation that is using your platform? So as AI agents become roam within the software industry and are able to make decisions, each AI agent that's solving these problems, it needs to have an identity, needs to run on some type of mythos or some type of CrowdStrike security level. So each agent will have to have a security level that is almost at mythos level or whatever. And because they have the security level, they're able to actually go in and out of corporations' technologies. So that is, I think, one of the most important things that people don't realize is having the cash, the governance, the security, and trustworthiness to actually have these agents trusted by the corporations to do the tasks that resolve technology related problems. And security is the number one thing that companies will never stop spending their money, no matter whether you're in a recession or whatever you're in. Your company's not doing well, you will never sacrifice security. So that's why it's important for a lot of people to realize that like a company like ServiceNow has built the reputation of their security for years and years and years. And so now they're just gonna upgrade the security that they have, the platform, into step number 2, plug in the agents. So this is these are some of the reasons that I kind of like ServiceNow. The CEO is pretty impressive. He has he has really embraced the whole AI idea, and he I think has said like he wants to take the company to a a trillion or something like that, $1 trillion or something. And so when a CEO is saying, hey, we want to take this company to a trillion, well, I'm gonna take them at their word, and then I'm gonna see what they do with their actions, and if they're actually releasing products to get them to that goal that they have set. And ServiceNow has been doing really good at getting to that point. So here they're saying we are the AI control tower for business renovation, reinnovation. We move with the pace of innovation to help customers. So essentially, as we're looking at this, something you got to realize is like they're selling the products. They're trying to let the clients know, like, hey, we're actually building like AI and the services that a lot of these corporations need. And the biggest thing that they always brag on is this like AI control tower. And the way I think the best way to think about that as an AI control tower is that like they are going to become the main corporation or the main company that almost all or majority of ServiceNow customers are going to use, and also like CRM, because a lot of people are saying, and we're kind of seeing it what's going on in the industry. Like CRM is losing a ton of business, and ServiceNow seems to be growing a lot faster. So yeah, so it looks like ServiceNow wants to become the control tower, be able to control what's going on, and be able to come up with solutions around IT and agents for corporations. Something to also think about is, now imagine if you're a corporation and you're trying to solve your IT related problems, and you're like, forget ServiceNow, I'm just gonna do it myself, right? And so if you're saying that you're gonna do it yourself, well, that means you need to build out an IT or AI, an AI that can roam around and do tasks within your corporation. And you need the knowledge, people that are willing to do that job and are proficient enough to actually build out in scale. You need the money. So now you hit a wall of like opportunity cost. Should a corporation, let's say, should a company focus on building a platform that resolves their IT problem, use their investment money towards that, or just pay another company that has the platform already, and all I have to do is just download it and allow all of my employees to use it, and then on top of that, like, you don't have to build all the integrations because you've outsourced that product. That is not your bread and butter, and as a company, that's not how you make money at all. So that is why I think like something like ServiceNow, and we see this all over the place. Like that's why some companies don't really focus on um, certain aspects of their business because that is not their profession. It's not what they do. So they outsource that. They say, hey, we'll have this we'll hire this group to do this, or hey, like our marketing is done by this team. We don't do marketing. So anyways, the idea is sometimes corporations will outsource due to opportunity costs because they think they can make more money by giving the solution, buying the solution, outsourcing the solution that exists rather than having to build it from the inside. Because if you're trying to build something from the inside, there's a lot more you have to do. You have to build it, you have to have the money, the technology, the people, and then the knowledge and the know-how, versus another company that knows exactly what you need and understands what's going on in the industry and is always focused on the solution. So looks like they're showing some financial results here. Let's earning hub. So this might kind of slow things down, but let's see how it goes. So this is their financial highlights. So one of the most important thing for ServiceNow is that they have to show that they are getting subscribers and actually selling their AI products to their clients. So subscription revenue, as you can see, you want to see this number increasing. So in Q1 of 2026, their subscription revenue increased year over year by 22%. Non-GAAP constant currency of 19%. Current RPO went up by 22.5% year over year, and the non-GAAP 21%. And then non-GAAP operating margin is pretty good. Non-GAAP free cash flow is 44% annually. So this is pretty impressive. So you have a company like ServiceNow that is still growing. So how are you gonna fade or imagine that a company like ServiceNow isn't gonna, continue to grow unless you really have unless you really see something that nobody else is seeing. The only thing that would slow them down from growth is some kind of recession, some kind of and even imagine, like, even if we hit a recession, do you think corporations are gonna just be like, no, actually we're not gonna need any IT solutions anymore? No, all of their customers are gonna continue using ServiceNow products. And so, okay, so as we're looking at the financials here, I wanted to quickly bring up, how is their earnings doing, and are they beating expectations? So let's quickly look here at their at Earning Hub. So today, obviously, they're down 2.81%. And if you look, this company since Q1 of 2022, every quarter, earnings per share, they continue to be. And look at the gap between EPS expectations or estimates versus the green where they actually come out at. I mean, the gaps get larger and larger and larger, as you can see. Earnings per the amount of shares that are existing, and one of the reasons that you are seeing this gap between the EPS continue to grow is because ServiceNow has decided, you know what, we are cheap enough that we're going to buy our own stock. So they are going to the marketplace and continuously buying their own stock. from the market, and that's why their EPS continues to go up, and also while their revenue continues to go up. So earnings per share will continue to climb as the revenue grows, and then the less amount of shares that are out there in the marketplace. So anyways, all this to say, you look at this number and you say, man, this company is growing, making money, and also growing revenue or subscriptions by 22% every year over year. So increase of year over year. If we look here, I mean so we just looked at EPS. Let's look at revenue and see where they are. So here it is. So in this case, the blue line is what their actual revenue is, and then this gray line is what the estimates were. Look what's going on here historically. This is a company that continues to beat revenue expectations, right? Has there been a quarter? Maybe they came flat in Q3 of 2022, but now this is not the same company, and they're growing, and they I think also beat. Let's just scroll down and see. Yeah, they beat revenue by 0.6%, EPS by 21%. Obviously, they're buying back shares. Strong top line and backlog beat. Q1 subscription revenue 19% constant currency. RPO $27.7 billion, which grew about 23.5%, with current RPO of 21 year over year, and 100 basis point beat versus the guidance. So margin, cash generation, non-GAAP operating margin 32%, was 50 basis point above the guidance. So ServiceNow continues to beat. Look at this. If I can, I just scroll down Q1 of 2025, and every single quarter, this is a company that continues to beat and grow their analyst expectations. So pretty awesome, right? From financial financial reporting perspective. We'll get deeper, and we can look at their we will look at their actual data and see how they do from from their income statement and so on and so forth. So let's continue going down on this. Yeah, just give me a second. Looks like just give me a second. Yeah, there is someone knocking at the door. How do you stop recording? How do you pause this? Let me just give me a second. Let me pause it. There's someone at the door. Just a second. Dang. Oh well, that lady was annoying. Some kind of petition signature. She needs to. But I hate it when people knock on my door. So annoying. All right. So let me quickly read this, so we can kind of see, what's what's the plan? Like what are they trying to do? Um, I really don't even need to read it, to be honest. The guidance there, what they're trying to do is grow and adapt AI into what they do. So, guidance summary, year-over-year subscription revenue. So this is kind of good to see. Subscription revenue, previous year growth, actual growth, and non-GAAP growth. So previous year growth, actual growth. Previous year actual, previous year actual. So previous year actual, previous year actual, fiscal year 2025. Currency impacts, obviously, customer cohort growth. Green 2011. So as illustrated example 2011 customer cohort to let's see if we can read this. Damn, it's kind of small. So as an illustrative example, the 2011 customer cohort started with contract of initial AC annual contract value of 100 and grew to annual contract value of 3,000. I see. Okay, this makes sense. So the 2011 customers, as you can see, have grown their contract amount over time. And you are seeing that even customers that in 2026 are slowly increasing their annual customer value, the amount they're paying and how much they're growing, their most current customers, which is pretty cool to see that they're actually making money or increasing the contract value for most recent customers as well as the older customers. So customers stay and they end up spending more at ServiceNow. Expansion of customer relationship. So number of customers with 5+ million annualized annual contract value. As you could see, which is pretty cool to see here, is like each quarter they are growing the, I guess I'll just call it ACV, annual contract value. And so 13, 13.4, 13.7, 14.2. So they continue to grow their ACV. Pretty awesome. Revenue rate. This is pretty impressive. So let's zoom in and read this. So they're saying that they're excluding the closure of large U.S. federal agencies, Q3 2025 renewal rate would be 98%. So, okay. So I guess some, Trump obviously closed off some government agencies. So obviously they lost some business from there. But without that, they're saying that renewal rates from existing customers is 98%. It's ticked down a little bit here, but that's because of some of the government agencies that were closed down. What does this tell you? Well, this says there's nothing more stickier than a ServiceNow contract. Pretty crazy to see. So let me actually do this. Okay. So once customers come in, start using ServiceNow ServiceNow products, they're not going anywhere. They're stuck there. Trailing 12 months new ACV contribution across workflow and product. So technology workflow, CRM, and creator workflow and others. So what? In the technology workflow, they're seeing about 50 is slowly going down here from 52 to 49. Their CRM and industry and co-business workflow, you know, kind of stayed consistent, and we are seeing growth here in creator workflow and others. So the security, so their technology workflow, IT service management, business workflow include customer service management, work legal and contract operations, source to pay operations. So it says historical presentation disclosed net new ACV contribution across product and are not comparable to the new ACV contributor across workers and product discussed herein. Trailing 12 months GAAP revenue, North America, pretty flat. EMEA, pretty flat. And APAC and others, pretty flat. Once again, I expected that because they showed us that they are a sticky business. Renewal rates, once customers come in, they end up just spending more. Pretty cool to see. Trailing 12 months of GAAP revenue by geography, so pretty cool. Headcount by department. All right, this is most likely where they're gonna end up chopping some people. S&M, yeah, I think this or here, research and development, could be where they end up chopping some people off. But what are we seeing here? So 859, 878, 9, 1,000. So we're seeing growth here in PS and other cost of sales, purchase sales and other cost of sales. We're seeing some growths here. Sub cost of sales. We're seeing S&M growth. This is pretty stable, not growing too fast, but we are seeing growth the last quarter, and then Q1 of 2026 it did grow. This is also growing, so it looks like they are growing the number of people that they have, and I wonder if this growth is actually adding more AI related teams to those different types of departments. But in the long term, I do kind of see ServiceNow reducing the number of people that they're gonna have to operate with. Operating free cash flow, pretty strong. Non-GAAP net income, diluted EPS. Okay, and then their financials. Okay, so there you have it. I think kind of previous issued guidance. So as you have it, we've kind of looked at, okay, stock analysis. We kind of looked at, how is the company's, performance. Seems pretty good. The technology moat seems pretty good. And then how, okay, let's see this. And then their partnerships with some of the companies out there around AI is pretty impressive to see. So here's a quick sales pitch they put together. We are the AI control tower. Of course, they're selling tactic for businesses, reinnovation. So subscription revenues 3.67 year-over-year constant currency. Anything that's kind of cool to see. So here it is. So they're kind of saying this is a pretty cool map to look at. So from what I see here, it says one platform ready for anything. So where is ServiceNow? Here. So ServiceNow sits at the layer where all these companies can kind of do business with regarding IT tickets, employee related issues, sensing, detecting, and acting. So they have any data, any model and workflow can work with ServiceNow's system identity and asset, ServiceNow's product. That's pretty cool. They're also saying any cloud software, any, and then also they're saying that it is a secure system that they're building. It senses, detects, and acts based on what the the different people are working on or having issues with. And then it's saying that, well, they resolve the problems related to IT, CRM, security and risk, employee experience, and app development, all done through autonomously. And then these are, I guess, the industries that they're willing to work, that they can work with in any experience: chat, web app, voice, enterprise search, video. Pretty cool. Something that I kind of saw, which I thought was pretty neat, is like right now when you have an IT problem, you send it to somebody at ServiceNow, and they're going through and trying to resolve it. And imagine if you were an employee at ServiceNow trying to solve these problems. Imagine you're just in your car, you're driving around, you get a notification, hey, your IT ticket, you received this IT ticket, ready to be. The agent has found out exactly how to resolve the problem. You get a ping. Do you want to approve this problem resolution by the agent? You just send a an email reply back to the email and just say yes to resolve the issue. And so you're not stuck at your desk, trying to solve whatever this ticket is. Instead, you're able to use ServiceNow agent to just tell it what to do using your phone. So earning results, I think we've seen that. Let's look at their financials real quick so that we know how they're looking, how they're growing. So more of like the long-term picture here. So revenue, Q1 annualized. So we're going to start in 2021 and go all the way to 25. So revenue is growing what? So this company is growing, you can see, almost at 21% year over year. And pretty impressive to see. But even better, while they're growing, they're buying back their shares, so EPS support there, which is pretty impressive. Cost of revenue is going up, so 1.4, 1.6, 2, 2.3. It's growing because they're a growing company. They're spending for that growth. So as long as a company is growing and their cost is is going to grow because they're servicing more and more clients. Gross profit, that's also increasing perfectly. So we went from 4.5 to 5.7, 7, 8.7, 10.3 billion dollars, which is pretty impressive to see. Let's go into net income. Well, net income in 2021, they're only making $230 million. Now they're making $1.7 billion in net income. And this is I think the benefit. It looks like they missed net income here, and most likely, I'm thinking most likely is due to some kind of like. Let's see why that happened. I mean, total operating expenses went up a little bit, but not too crazy. The gross profit went up. So it looks like something caused them to lose a little bit more on net income. Total non-operating income 3. But I mean, kind of, it went down. Their growth kind of went down here in net income growth. But overall, like the company net income is growing just fine. Let's see, share change year over year. So if we look at the share change, so the shares change calculates whether the numbers of outstanding shares is increasing or decreasing. So as you can see, it's red. the company continues to buy their own shares out of the marketplace, which is pretty awesome. Really puts the company in a very strong financial position. Sometimes, some people say, "Oh, well, they should focus on not share buybacks, but they should invest that money towards growth or whatever." Not, they're growing at 22%. So what do you want them to do? Like spend unnecessary money? So I don't know. I am totally okay that they're doing share buybacks. So let's look at their assets and liabilities. So sometimes what I like to do is just look at the basics and say, well, are they leveraged or over leveraged? Well, so you got their current liability 4.9 here and their current assets. So assets 5, liability 5, pretty close 1-to-1 here, 7.3, 7.7, 8. Assets are growing, liabilities are growing, they're almost even. So they're almost 1-to-1 on the current ratio or quick ratio. Now let's look at their total assets here, total liabilities. Let's compare it. As you can see, their total assets to total liabilities is almost 2-to-1. So they have more assets than 2 more assets for every 1 liability that they have. So that kind of shows you the company is well protected from a liability perspective. And so they have enough assets to be able to, current assets to be able to cover, current liabilities and so on and so forth. So total debt here is 2.2. It doesn't really change much. So the total debt is equal to the current debt plus long-term debt. So about $2 billion in total debt. And then you have net cash, meaning cash minus debt minus cash minus debt. And so you have their total cash growing here, 13, 87, 26, 11, which gives them a lot of retained earnings. So total cash minus debt gives them their net debt. So this company really, at the end of the year, at the end of operations, after you start at revenues. You start at, let's see, total debt. Yeah, you look at their debts, and then you get into like how many debts, retained earnings that they have, and it looks like the company's coming on top here, and they're actually their amount of debt that they have, while it's going up, they're able to have positive cash growth. Because the number of shares are going down, while also the net cash is growing. Pretty impressive to see that they're able to have net cash per share continue to increase here. Click on this. Okay. Let me make sure. Yeah, so that is ServiceNow. I think we kind of looked at what we kind of wanted to. That is essentially a decent summary of what's going on in the industry. If we were to look at, I think we can go to screener here and filter out and look at, okay, how are a lot of these software companies doing? Technology, I think there's software application, yes, software application, infrastructure. So let's look at software application. Let's filter by market cap here. Hopefully ServiceNow. There we go. So if we were to look at like how how they're doing overall, a lot of these software companies, SAP, Shopify, Uber, ServiceNow, Cadence. As you can see, 10-year performance has been amazing, right? Long-term performance has been amazing. But then as you get in closer and closer to current moments, software stocks have been beat up so much. And essentially, they're saying the industry is dead, AI is replacing them, but they don't understand that the technology, the knowledge, mode is important. I think something I forgot to say is like, imagine having an agent, and you ask the agent question, and you let's say you give an agent a PDF, a blank PDF, and you ask the agent, hey, um, can you tell me all the words on this page? The agent's gonna look at that PDF that you just gave it, and it's gonna say, well, it's blank. There's no data there. Now imagine that you have a billion data sets on a PDF. Now the agent can actually give you relevant um, outcomes and actually have some data to read. And a lot of these companies are like the paper with billions of data sets or tokens, um, and it allows the agent to actually look at something and give you an outcome based on what it's looking at. What it's looking at. So that's why I'm saying like ServiceNow, SAP. I mean, I don't know where IBM is. IBM. Some of these companies are very, very important, and have the data that allows these AI companies to actually use. So let me filter this and just say like what large cap 10. Wait, let's go large cap over 10 billion. So there you go. So these are the companies that the industry is saying is going to die and it's not going to be able to function anymore. And I really doubt it, because this Cadence, looks like Cadence is getting the most love here. 10-year, about 1,500% return. And every quarter for this company has been amazing, except the past week. It's been kind of getting beat up. If we were to look at, let me maximize this all the way and zoom in. If we were to look at like ServiceNow, it is getting beat up. I mean, if you look at 10-year performance, about 600, and then if we look at the 3.5% in the past 3 years, negative 3.5%. But then from then on, it's just straight up like all negatives. Like it's not doing well at all. So a lot of these companies are left for dead, and I think there are some gems that are gonna be bangers and are gonna in the next 3, 4, 5 years gonna have a really good return, um, because they have my main argument is they have the data that a lot of these companies need, um, and and actually one thing I've also forgot to kind of say is that like um, a lot of companies, like if they try to build like a service now um, into what they do, it's they're almost like spending almost wasting money on experiment, to see if they can actually do something. And as a company, I mean, yes, you want to experiment, but you want to experiment um, and in areas that you want to go as a company. Like you want to like if you're Salesforce, you want to experiment in sales, not on building your own technology that is not related to sales. And so that is why a lot of companies can't try to imitate this, because if they try to, burn up all these tokens trying to solve a problem that already exists, it's actually more of a waste of time and opportunity cost. But yeah, this might be a good, this might be even a good list. You might want to go through it. These are some of my favorites. I mean, software application. I mean, there is a video where Jensen says, let me go find that video, where Jensen kind of was frustrated about what was going on. Jensen on software application. So he was kind of getting frustrated on an interview, and he kind of yelled, and he kind of just blurted out, "Oh, software application is gonna be it's gonna be one of the winners in this AI industry," which I thought was pretty profound, coming from Jensen. I mean, he is at the center of the whole thing. Let's watch this video here, and then
under the service.
Oh, let's watch this video here, and then I'll find the other one while we watch this one. And I think it's a pretty good video to watch. So let the ad play. Pause.
He is in Las Vegas. Both shares are fractionally lower, John, but with more on what sounds like a very big announcement.
Oh, for sure. Kelly, thank you. I am here with Bill McDermott and Jensen Huang. Hey, guys, we're on. We're live.
Yeah.
Bill, thanks for having me once again here at Knowledge. Jensen, always great to see you. Bill, I want to start with just the market temperature. I'm looking at this, and ServiceNow is being priced like Microsoft on earnings, like Oracle on revenue, despite growing 1.5 to 2 times faster than either one of them.
Yeah.
But you made some projections today that maybe are going to catch the street's attention on some of that. Tell me about what gives you the confidence to say you're going to hit 30 billion plus sub revenue by 2030.
When I came in 2019, we were a $3.5 billion company. Now we add a ServiceNow every year. This year we're projecting to be nearly a 16 billion company. Right now we have a 28 billion RPO. So we're growing faster than any other enterprise software company at scale in the world ever happened. We yesterday said to the financial analysts we were going to double the company again, and we would do that by 2030. And the company right now is really focused on a couple of things. One is agentic business. We have to be the agentic front door. We work with great companies like NVIDIA, the great Jensen, the great NVIDIA. We announced Project Arc. You'll hear about that today. I'm sure Jensen will have some thoughts on it. But we want to manage the identities of the humans and the agents. We treat the agents just like the humans, so the rules and rails can complement this great AI revolution. The enterprise is a pretty messy thing, so we clarify it, we clean the mess up, and we make sure that the AI is secure. And I think that is a big breakthrough, and we told that story yesterday, and people really liked it.
Jensen, tell me about, this is at least the third time that I'm seeing you here at Knowledge. We're talking with an application software company. You've talked about this 5-layer cake with energy, chips, platform, and applications at the top necessary to really make AI work. Why is the application layer not just important, but long-term profitable, do you think? Why does that need to happen, and why is ServiceNow one to watch for you?
This is one of the greatest transformations for the software industry ever. For the first time, service is software. Software is service. And the service industry is 100 times larger than the software industry. And so now, for the very first time, you're going going to have human agents that are, of course, managed and supported by ServiceNow, augmented with AI agents that are going to be working autonomously, working with humans, and they're all going to need identity management, access control, network control, all of the things that companies do with respect to regulation and compliance and governance. All of that has to be provisioned, whether you're a human or an agent. And in the future, of course, out at the edge, robotic systems. All of these autonomous systems, the time has now finally come. Now, of course, for our industry, for the rest of the 5-layer cake, it's completely revolutionary because agentic AI needs to be processed in real time. Unlike software of the past that's pre-recorded, you could put it in storage, retrieve it as you need it. Today's software needs to be processed completely in real time. The amount of computation necessary from generative AI 2 years ago to now agentic AI, it has gone up 1,000% because the AI now has to read a lot more, use tools, reason, generate a lot of tokens. Not only that, the amount of use has gone up orders of magnitude because now for the first time, AI is doing work. It's doing useful work, and the return on that investment for software companies, for agentic companies like ServiceNow, is completely accretive. And so that time has finally arrived.
There we go. And so he kind of pointed out exactly what's going to happen with a lot of these AI software companies, and they're not going down. They're not going anywhere. And you have to look at this presentation, which I did, and I thought it was pretty impressive that the type of software they're actually releasing and how they plan to help their customers. There is one more thing that I thought I gotta find it, but yeah, pretty impressive that they're actually showing off what they have. So this is what I like about some companies is they say, oh, we're gonna do this, and you actually see them spending that money on building that future. So ServiceNow is one of those companies that I really like. The next one we'll talk about another time is Axon. I don't even know why it's not coming up here. So Axon Enterprises is one of those pretty impressive companies. Yes, the stock's getting beat up. As you can see, their stock is getting destroyed, but the service the company is looking to offer is pretty impressive. So what are they doing? Well, they are one of those companies that police officers and investigators, they're a software company that helps like law enforcement essentially. As you can see, they got pretty decent ratings, a lot of upgrades to a buy, price target of 700, 900, and some downgrades to 625. But overall, the lowest rating is this 375, and the stock is at $446. And so I had to buy this company. I think if we're looking at the government, right, needs to be able to use software, and they're not going to build their own software to, to do what they are currently doing or enhance their current job. Often, you look at a company like Palantir, they are also one of my favorite software companies. A company like Palantir that sits at the center of software and AI, they are doing amazing. They're building amazing relationships there. This company, Axon, is starting to do that. And what they do, they build the cameras, tasers, they integrate their technology in making 911 calls more efficient, and actually help officers when they get to the site and make sure that they know what they're doing. and they're not randomly just handcuffing the first person that they see on site. So they get a really good summary of what to do once they get on at the 911 call destination. So engages in development, manufacturing, and sales of conducted electrical weapons for personal defense. It operates through the TASER segment software and sensors segment. The TASER segment sells conducted electrical weapons, TASERs, accessories, and other batons and related products and services. Also, the TASER segment sells conducted electrical weapons, accessories, and other related products. And the software center segment includes devices, wearables, applications, cloud, and mobile products. So one of the things that you can imagine is so they sell the cameras. Right now, the police officer cameras are not AI engaged. So what this company is doing is saying, hey, buy our cameras, and our cameras will record what's going on, and by the end of the whole investigation, you're gonna be able to log in and see a summary of what happened, people's names, what was said, and the whole process of what happened during that 911 call. Which is, the tedious task of being a police officer, and I know that is some details sometimes they hate doing. And so you are seeing some sales, insider trades are happening of the officers, CEOs, CFOs, or directors of proposed sales, selling. You're able to see a lot of selling, but insider selling doesn't always paint the picture of what is actually going on here. Sometimes it does, but most of the time it's just noise. Just because insider selling doesn't mean the company as a whole is not doing good. They could be selling shares to cover taxes or buy a house. We don't know. So here is a good example of some of the stuff they sell. As you can see, they're connected to drones, protect more lives. Imagine the World Cup is happening right now, and a lot of the cameras are, I bet, connected Axon cameras. Find vehicles faster. So they have a vehicle finder. Essentially, they're able to look at cars and determine exactly what kind of car. Let's just click on and see what kind of car is being driven. So a lot of their stuff is getting plugged into, I believe they're at the World Cup right now, unlock more intelligence across every camera that there is. So they plug in their cameras and they're able to see what's going on. Scroll down, they got their Axon cameras for force multiply with AI era plan. So discover new capabilities with AI era plan, including Axon Vision, all new features. All new features for Axon Assistance, attribute search, and more. So for example, if you're playing a video, you can, and you're using some kind of AI, you can just say, hey, what happened during this instant, focus on what's being said, so on and so forth. And then revolutionize real-time operation, focus from connected cameras to real-time crime center, gain better situational awareness. So imagine you have a Axon vision of what's going on at a stadium, and you're able to make decisions on like movement and what's going on. They are connected to drones, I believe, so protect against aerial threats and deploy drones as first response. And I believe that's exactly what's going to happen in the future. Drones are going to be like each department is going to be mandatory that they have drone defense, and drones are able to respond rapidly. And maybe drones parked on some of these large highways, and those drones might be directly connected to the Axon software. And police officers just simply log in and are able to see what's going on. And again, here it is, the Axon cameras right on this pole. So protect your area space from unauthorized drone. It's pretty cool. Stop threat without taking life. A new era and less lethal technology is here with Taser 10 and Axon VR training. So they essentially have this VR experience where they put you in a scenario and whatever kind, and you make certain kind of decisions, and then your officer kind of criticizes how well you did. Pretty cool. Safety safer communities start with smarter tech. Protect life. Life means protecting people in all public spaces, including shopping centers and stadiums and health facilities. So as you can see, the World Cup is happening. I bet you a lot of these Axon cameras are working. And the cool thing about this company is, like, when you work with the federal government, the budget is as almost unlimited, so they're able to pay for a lot of these products. And so that's why I think Axon working with police departments and governments is more of a sticky product. So essentially saying that let me turn my camera on. Essentially saying that their AI products are within the system, and once you start using it, and imagine you have a video you're playing and what's being said, and you're able to query or search what's being said and kind of look at the details, and so that you don't miss it, and often and being able to analyze what's being said using their AI software. And once you become accustomed to this, you don't just quickly switch to another company. You're stuck. You're there, and the employees and officers that use it love the product, are not going to go anywhere. And so this is another reason why Axon becomes really important. And for others, like I don't know, I don't know if the people are going to accept what Axon is doing with their AI products, but at the end of the day, it's the direction. It's the direction that the world is going. And so when cameras first came out, I'm sure people didn't like it. Some people didn't like it. Oh, they're recording my face, so on and so forth. But cameras became normal. And so I believe that's what's gonna become, is you have all these cameras that are going to be all over the place. They're going to be able to record and give officers a complete summary of what's going on, who's walking around, all in the name of public safety. And so pretty impressive. One of the I think one of the more important things is, like, imagine, like, as a police officer, when you hire somebody for a shift, you say, hey, we have 10 people. There's a lot of people nowadays that don't even want to become like police officers. So there's less people that are police officers. So what does that mean? Well, they're going to probably use Axon's products as a way of dispatching people based on an analysis of what's going on in certain communities. So imagine now Axon comes up with a plan to kind of, hey, give police officers and chiefs the ability to dispatch different people to different parts of the city that really have the higher crimes, or that happen at specific times. So that means you don't have to, as an officer, you don't have to guess. As a chief, you don't have to guess where to dispatch people. They can simply look at their screen in the car, and the screen is going to tell them where they need to go automatically, without anybody really dispatching them. And in a way that could reduce the amount of crime. I don't there is a company. Shoot, I forgot their name, but they do this exact thing. Investor relations. Let me go to let me go into companies and show who they were. Let me go search. Let's go into holding. They're called holding summary. SSTI, yeah, SSTI. They do something similar to what they do. I mean, you've heard of this company before, and they do something similar, but they're a lot smaller of a company. Once again, they're $100 million market cap, and they use a lot of AI, and especially they work around the dispatching and evidence and reconciliation. And you've heard of a lot of the stuff that they do, especially their shot spotter. Shot spotter essentially is like a product that this company has that senses where a shot is coming from. So, so when somebody shoots a gun, that sound can be located by sensing how loud it is. So from the most faded sound to the most loudest sound, and slowly kind of dictates or determines where that sound is coming from, and they're able to determine where the shot is coming from. And also because of that, police officers automatically just go to where the shot was and where the sensor picked it up, and they're able to kind of pick up on that and get to their destination before someone even calls 911, especially in a world where people don't even feel comfortable in getting engaged with police officers or calling, especially in some neighborhoods that people don't want to become a snitch or something like that. Police officers are able to just drive there and show up and help resolve whatever problems that are being the community is facing without the 911 call. Yeah. So to quickly go over, so technology platform, mission-driven, market leader, and attractive financial portfolio. By the way, there aren't a lot of companies that do this. This is really their industry, and it's hard, really difficult to get into this industry because, one, you're talking about working in government, in communities, and kind of giving insight and having proprietary data related to companies, right? So their goal is to reduce gun deaths by 50% by 2033. So we serve and protect our customers every day. So U.S. state and local, U.S. federal, international, and enterprise level. That's who that they want to work with, and actually do have customers. So they say they're trusted by 17,000 state and local police safety agencies, FedRAMP, high cloud service leading customers, drone providers, and then internationally deployed in more than 85 international countries. And the workplace safety is a top priority for real-time healthcare, logistics, and frontline workers. So as you can see, they're almost in every in the government and as well as enterprise solutions here. Results and opportunities. So they're saying by 2025 annual, they said $2.8 billion, recurring revenue about $1.5 billion, and total addressable market about $159 billion. I don't think we talked about the market cap of the company. Once again, they're not that large. It's still small cap company here, about $36 billion market cap. Axon, our ecosystem, so they have the drone sensing and so on. So they have integrated hardware and software ecosystem. So you have all these platforms that can connect an AI, cameras, drones, cameras that they connect to light poles, cloud service, and they protect lives and then they have drones and guns and software application that they have. So one live Taser 10 cartridge fires nearly every 30 seconds in the US. Wow. 400K VR training sessions, which is pretty cool. Over 660 million hours of recordings from Axon Body 3 and Axon Body 4. So they have different types of cameras they can sell to their customers. Pretty impressive. And then 1 million monthly fuses live streamers. So the most interesting part about this company is like talking about data moat. And so imagine the amount of data that they have access to and how they can use that data to video data. I mean, that is more important than audio data. And the fact that they can use these live footage of how to train officers to respond to certain scenarios and where a lot of these 911 calls are, where they're going, how are they interacting with them. Pretty impressive, and make that into a data that they can actually collect and come up with a training plan for their employees across federal, local, state, international enterprise companies or partners. So they're saying they have 1 million monthly views live streams, 300K plus community camera connected, and then 200K monthly Axon assistant messages. So and then they got their software platform. So safety's fully connected, supercharged by AI. So here it is, safety sensor networks. So their ecosystem. So Axon portfolio of sensors has grown from personal protection and documentation equipment with taser and body camera devices to have a comprehensive suite of wearables, devices, and scalable platform solutions capable of capturing vast set of data. Okay, and then fully connected. This is their software platform. So this is pretty cool. Like imagine police officers driving in their cars, whenever they see a plate, that plate can quickly be sensed, or when there's like a building, you're able to see what's going on. A large building like this, you're able to see what's going on, and then depending on what people are doing, the cameras to automatically give agentic response, and because it has a whole set of data and how people are acting, and kind of come up a consensus and give alerts of unnormal situations, and it's supercharged with AI. So artificial intelligence lives behind all sensors and workflow, unlocking value across Axon's ecosystem, safety, security, and reliability. Emergency response accelerator. So 911 call received initiates an AI assistance workflow to gather critical information. So 911 calls comes in. Usually, there's a lot of details that that's given, and that's, hey, I just saw this person wearing this color, height. He has this short, this type of hair, blah blah blah. So real-time camera center RTCC pulls location and available camera feeds into the view, and you're able to see, okay, like what's going on based on this call. And then obviously they're going to use some kind of agentic AI to kind of find this person. Call details are reported over body-worn cameras, and then remote operated drones dispatched to the scene. And then this Axon AI assistant device is used, and it can be used to actually translate. So if you don't know any Spanish, the officer can respond to the local call and be able to talk to the individual in any language. Well, in the number of languages that they have programmed the device to respond to, which is pretty impressive. So now you have cameras, description, and oftentimes what happens is like an officer, kind of forgets what was relayed to them, And by the time they get to the location, they've totally forgot, okay, what did they say? Like, what color were they wearing? You know, what color was the suspect? Suspect. All these details kind of get forgotten. But imagine by the time you show up, you look at your screen has kind of has a character of the image, or maybe the real-time footage has pulled where the person is, what they look like, and you're able to just show up and know exactly who to go for. So infrastructure and protection, modernization, so drones, drone threat detection through drone tracking AI, local location of aircraft, flights, paths, and origin point of operator identifier, stadium security arrives at a pilot location, law enforcement supports on the way. So the drone shows up, tracks what's going on, and then the police show up, and then you have these. If people are flying drones, you know, you're able to use these tools and kind of disrupt those drones from flying around. Imagine drones being used as a weapon, essentially. Now, in the communities, this is the enterprise, and this is the training platform that they were talking about. They're able to use to train police officers in a VR and virtual world. And this is Axon products deliver solutions for our customers, decrease time spent redacting evidence by 75%. So eventually, imagine you show up, you forgot, you know, the description of the person, but then the AI was able to kind of put together what the person should look like, so you don't make a false arrest. They say decrease time spent writing incident, because now a draft is written out as soon as the call is finished, and you sit down at the office, you have everything written down for you, you're good to go, and maybe you just have to make some edits. So if you don't know, every police officer, after they do some kind of encounter, they have to write down a summary of what took place. So now imagine if an AI agent sees what was said, what the video picked up, and is able to write a summary for you, and all you have to do is a little bit more editing. Over 400 plus unauthorized drone detected. Taser 10 was a no-brainer. Increase the recovery of a stolen vehicle by 32 minutes with fuse cameras. So they think they can continue to grow in this industry, and I believe they're gonna continue to grow. And right now there aren't too many companies coming for the same TAM that they're going for. So they're saying here this is the massive market opportunity. They're saying that U.S. state and local about $19 billion, enterprise $48 billion, international government 76, U.S. federal saying 12, and civilian 5. Total addressable market of $159 billion that they think that they can grow into or take. By product area, so they're saying these are additional areas that, you know, they a little bit more like broken down how they can make some of that money. And it looks like the main focus here is DMS plus add-ons, taser and training, body camera are the way that they're making money, and AI plans, real-time operations, drones, robotics, vehicle intelligence are going to be the next ones. Healthy state and local budget tailwind. So one of the most important things to realize about this company is like client retention is going to be huge, especially when you're, you know, already in the public service. You're working with a company. Those companies aren't going to just like drop you. Like once you're in their workflow, you're in their workflow for years and years. So state and local, as you can see, the U.S. public safety spend is resilient and growing. As you can see, the U.S. government doesn't stop spending money, and it's not gonna. I think with time, it's not gonna. This isn't gonna keep going down, and it's only gonna trickle into. I think they're saying into Axon's products. They're saying the opportunity is there. This is right now where they are, and premium bundle adoption. They can get a little bit more of the pie, and other spends are still there that they want to be able to capture here. A growing priority and emerging customer verticals that they want to get into is 8 and 10. Police officers in the United Kingdom stated body-worn cameras make officers feel safe. DHS, U.S. federal enterprises, corrections officers, and Justice Department. And even the cool part about this is like, imagine for evidence, right? When you have a camera, sound, video, a summary around with an agent, you're able to make a very conclusive summary of what happened, and are able to present your case if you ever have to go to court. So product-led flywheel of growth. So you build a product and integrate into subscription plan, enhance the product, attract new customers, leverage data, and give the customers what they want in a more efficient, better way. And you just a wheel that keeps spinning. I guess these are the subscription models that they have. The $99. It comes with Taser body cam, digital evidence management, the premium, and then this is a good way to do it because this is more of like test, and then this is more of like, hey, if you like that, you have all these other features that you can also do, and then you just kind of slowly upsell the client into doing more and more, especially when they're sticky already. This is what you want to sell them. $569 premium with AI era plan. 95% of our revenue tied to customers on subscription plan. Recurring revenue. So you can imagine recurring revenue is the best way of a lot of companies are making some of the best money out there. And then obviously their financials, we won't spend too much time. So AI era revenue looks like here, somewhat flat. Software services, somewhat flat, and then hardware, not their main bread and butter throughout the year. So this is a 5-year scenario. So sticky, right? That's what you're seeing there, a very sticky business. 75% software revenue over the last 5 years, 95% tied to customers and subscription plan. We can look at this at another time. This is obviously the financials and revenue. I mean, this company is growing. They're still a smaller company, but I think with time, they're gonna continue to grow, and especially as they add on AI and AI becomes acceptable. This is one of those pretty impressive companies from a stock perspective. If we're to look at this company in like long term, they've been around for a long time. Imagine being around this long, the amount of data that you've had, and also imagine this is insane growth here from end of 22. Is this what it is? May of 2022 to what is this? May of 2025, I guess, 2026. I mean, this company has grown significantly. Their stock almost went up to $900, now selling at $446. Their business model has only gotten stronger with AI, and I think it's just begun. So it looks like it's hitting this 50-day moving average and bouncing off of that. And I hardly doubt it's going down to this 200 moving average. If it does, it'd be pretty impressive. Would have to have some kind of correction. So there you have it. Another time we'll cover SSTI, and they're also the other SoundThinking, another impressive company, but I wanted to come live and kind of go over some of these opportunities that exist in the market, companies that are getting beat up in the software industry. And yeah, I hope you enjoyed that video. If you did, make sure you subscribe. I'll come back live and cover the rest of the companies, this financial education and business. Have a great day.